How's everybody doing? My name is Scott Forte. I'm a part owner of Eustis Mortgage out of New Orleans. I've been in the mortgage business almost 25 years. So I started when I was 22 years old. It's all I know, and it's been good to me over the years. So I'm actually moved here from Baton Rouge in 2018, opened up a branch of my old company, and then came on board with Eustis Mortgage in February of 21. So with that being said, we have been in business since 1956. Everything's done in-house. We specialize in residential. Loans are underwritten in-house, processed, closed, and everything. And I got 3 kids, married, 7-year-old daughter, 2 boys, 5 and 3. And
Total mama's boy too.
yeah, mama's boy. My mom's a hustler. She's still working. She's almost 80 years old. Works for New York Life, she's a financial advisor, does investments and all that too. But anyway, so I talked to y'all about a little bit about investing, how mortgage loans work with that, some good tricks that we have for acquiring property. See some young people in the room. So we have one, I actually posted a video on this a long time ago on Instagram, but it's a house hack. So if you're new to the game and you're looking to buy investment property, you could actually buy multifamily 2 to 4 unit properties using FHA financing, 3.5% down, live in one of those units, and then we'll count the rental property on the other units to help wash out your debt ratio. And you can do that every 12 months, kind of like rinse and repeat. If you're single, no kids, don't mind moving a lot, you could do this as many times as you want. So a lot of people, I had a couple of guys over in New Orleans that do it. So that's kind of like the first base that I want to touch on for the rest of the products we have. But single family housing, minimum down payment on those are 15% for investors. You got a little bit of PMI on them. Most of the time you get a better rate with 20 to 25% down. We'll do 30-year terms on those, 30-year fixed rates. Go up to 4plex. 4 units is our max, but we do have an investor now that'll go up to 9. Is that correct? So this is Jen Gaudio. I meant to introduce her. So she,
because my daughter's up to bat at the moment.
yeah, her daughter just signed with LSU to play softball. She's a beast. She's like number 5 in the country. So, but she's
Bad at the moment. So
yeah.
As often I'm not here.
Yeah. But Jen
Strikes out and I like throw this water bottle. So.
Yeah. She got like a 900 batting average or something stupid. Yeah, it's like insane. It's like video game numbers. But Jen is she's a badass. She's like a Swiss Army knife she's been instrumental in my growth with Eustis Mortgage. She's a VP of sales and operations and everything. She is like an underwriter, a processor, a loan officer, a salesperson, like everything. So she's probably the most knowledgeable mortgage person I've ever been around. And but I always call her up, I'll be like, hey, I need a way to make this, so we find ways to make deals work. Another good thing about our company that I don't know of any other company that is set up the way we do. So appraisers, most mortgage companies have third-party appraisal management companies where you don't know who you're going to get for an appraiser. We have an in-house panel of appraisers. So I've got like 5 appraisers on my panel from here to the South Shore, Baton Rouge. I think I got like maybe probably 7 total. But all of my appraisers have been in business, been doing it forever. One of them's over the board of appraisers of Louisiana. So values are always important, right? When you're buying property, especially on a refinance, if you're looking to maximize your equity, if you want to pull out cash to buy another investment property, or if you want to cash out your primary residence, take money from there to put down on an investment property, you want to make sure you get like a quality appraiser, not somebody that's, I've had a Rocket Mortgage. Guy came from Bay St. Louis, Mississippi to appraise a property in New Orleans and tanked the deal. So they called us up and we had to do I call it a life loan to revive the deal. But that's kind of like a couple of features about us that make us unique to the competition. And then with that being said, we've got non-QM deals too, like DSCR. We got bank statement loans. If you're self-employed and you own a business, but you don't like the IRS, nobody likes paying money if you don't have to, right? We have 12 months bank statements for personal, 12 months business bank statements we use. You can buy the property in your business name. You know, so she's good. She's great on non-QM. I do a lot. DSCR is a big thing right now. Guy in New Orleans I'm doing a loan for right now. He's makes a ton of money trading cards and doesn't show any income. But I said, what? Yeah, like he makes like ridiculous money. Um, yeah, like baseball cards. A card's worth $30,000-$40,000. He's selling. Yeah. So we took his bank statements and we cash flowed him 12 months, and it averaged out to like $83,000 a month he was making on these sports cards. So yeah. So he's like, wait, you don't need my tax returns? I'm like, and then so we do. So it was funny. Funny how this worked out, because we do this thing called cookies for contracts. Every time we get a new contract, my marketing partner sends out cookies to the buyer's place of employment. In this case, he didn't have an office, so we sent it to this house address.
We also put.
It's from the realtor, the buying agent, and us.
Yeah,
so they
from the agent and us.
Yeah.
Just to kind of spread awareness to the agent as well.
But it opened up a can of worms, because his ex-wife lived at that address, or soon-to-be ex-wife, and she didn't know he was buying a house. And she got these cookies, and she's like, called him up, threatening to take his kids away, blah, blah, blah. And he's like, went off on the realtor, me, and he's like, take that address out. Anyway, so he put the address in the application though. So we're like, all right, my bad. But he called me back the next day and he's like, this actually might've been a good thing, because I have a property in Tennessee that I need to cash out and pay her out. So I'm licensed in Tennessee and about 22 other states. So we're doing a refinance on that property using bank statement programs, cash out refi, to get her off his back. And it kind of worked out. So it's kind of funny how that panned out. So I guess the point of that story is, we do multiple states and DSCR. What's that? Yeah, right. But so we've got I'll let you talk about she's really good at the investor choice. I'm pretty good at it, but
I'm really good.
let's let her talk. Yeah. So the investor choice renovation.
I won't be talking about.
All right, talk about. All right.
Not just yet.
We'll say the best for last. No, I'm good. You go.
I mean, I don't need a mic. I can just talk.
Yeah.
It's totally fine.
I don't even think I need a mic. I talk loud enough.
Okay, so there's multiple ways. One, if you don't, I take care of agents in here, and then there's also some landlords in here too at the same time. So if you don't have investment properties, building generational wealth is what everybody kind of wants to get to, right? That's the long game. It's not the short game. So you do short games days like flipping properties. I flip properties too. That's a short game thing, right? The buy and holds is your long game. They also really help with your taxes. Side note. So if you don't have a door, you need one, because they really help with your taxes. And side note, if you ever want to like embezzle money, apparently a farm is like the best way to go. I had no idea, but a friend of mine called me and he was like, man, I'm getting like $100,000 back on my taxes. I was like, how? He's like, my farm. I was like, what? Okay. Okay, so there's multiple ways to, or money laundering, I guess, or whatever. Yeah, with sheep and cows.
Those are all buzzwords.
So there's multiple ways to acquire your investment property, right? You have your standard, save your 15-20%. You go buy an investment property. You have your closing costs. You go negotiate, and then you plug a renter in there. There's your standard way. Most people think this is the only way. There's multiple ways. You can also cash out. If you have equity in a current home that you have, that money is sitting there not working for you. So do something with that money. I don't know about you, but I am very happy. Remember like a couple of years ago, we were all like sitting around sulking because our investment accounts all looked terrible and our return on investments looked awful. And now we're like, oh, we're like getting 20% by now. This is so great. But if you have money that's sitting there in equity, it's not doing anything for you. So you could always cash out on your maybe primary home, or do a HELOC, or on another property, another rental that you have to generate more capital in order to buy another house. So you can always do that too. He's already told you that 15 to 20% is typically what the magic number is. 20 to 25 is actually your better, especially if you're really like interest rate conscious of what you're trying to do to obviously capitalize on your cash flow. But we also have our DSCR. So you can purchase homes in your business name. And the great thing with DSCRs is DSCR loans, basically, if you have your down payment already and you have a rental property that you're getting, but let's say you don't claim all the money that you're supposed to, and you actually claim very little money, or you don't claim any at all, or maybe you just haven't filed your taxes in like 20 years. I'm not judging you. Okay. What you tell us, Sam, is your business, not mine. But if you have your down payment that is there, DSCR basically takes the rental income that you're projected to get on that property, and it takes it to what that mortgage payment is going to be. Now, normal financing, when you go through traditional financing for an investment property, it takes 75%. So if you're getting $1,000 a month, I'm only going to be able to count $750 towards rental income. Okay. With DSCR, you take the actual whatever you're going to get for rent to your mortgage payment, and as long as that's a 1-to-1 ratio, you're golden. You're good to go. We don't look at your debts. We look at your credit to make sure you're up to par. We look at your assets, but other than that, I don't care about
No income.
I just care about
So it's a
income.
1-to-1.
It's a 1-to-1, and it technically doesn't even have to be a 1-to-1. You can actually go down to 75. So if you go to 75, your rate's not going to be as great. Side note, she hit a double.
Whoa.
Okay.
Nice.
Yeah.
Should have been a bomb.
Didn't suck. Not a disappointment today. It's crazy when you commit, because when she doesn't perform, she gets sidebar. When she doesn't perform, people start chanting like overrated in the stands. It's so crazy. It's craziness. Anyway, so DSCR, you take what the rent is going to be versus what that mortgage payment's going to be. So depending on what your credit is, how much you're putting down will kind of depend on what the max you can go. But you can go to like 75%. Okay. And I think 620 is the minimum credit score on DSCR. So some people think you got to have like spectacular credit. You don't. 620 is the minimum on that one.
You can rate going right now. Yes.
I mean, I have one yesterday that we walked in. I think it was like at 6.75 on a DSCR, not showing your income to me. And I'm not looking at your debts and a niche product, and you could put it in your business name that doesn't tie up your personal lines, is pretty dang good. You know?
What's the loan to value on your like a cash out refi?
I'm so glad you asked that. So you can do cash outs as well and rate term refi on DSCR. I'm pretty sure you can go up to 80%, possibly 75 actually. Actually, it's 75. I corrected myself. It's 75. I looked yesterday. Now the lower it is, the lower your loan to value on it, the better your price is going to be. Like, the better your rate's going to be. But DSCR is a great option for you to continue to turn properties in a business name. That is going to help you on your taxes, for one, but two, free up your personal line, because you're going to end up doing what I'm going to tell you about next, where you have to tie up your personal line for. But single entity is typically the best thing if you happen to want to get into DSCRs. I just highly suggest that you're a single member. Those just make it a whole lot easier for you on your entities that you're creating. So, which leads me into my absolute favorite product. So our investor choice product, okay, I need everybody to follow me. I am a Texan and I do talk really fast. So if I need to slow down, you just tell me. So seller, I know we have realtors in here. We use this tool to prospect with our realtors to help them grow their business with expired listings. This is also a way for you to purchase an investment property, renovate the property with no capital out of your pocket. None. Like, where you can buy, renovate, and have income producing day one with no money out of your pocket. So follow me. Seller wants $50,000 for the home. I'm going to use simple math. I'm Vietnamese, so I won't make it complicated. Okay. So $50,000 is what the seller wants for the home. Let's say you're going to put $25K into this property to get it renter ready. This is not a fix and flip. You're not flipping the property. Now, we created this product originally to compete with hard money lenders. I flip properties too. I dealt with my fair share of hard money lenders. I have some really great friends that are hard money lenders. I need them when I'm in a pinch. But they are really expensive. Sometimes you're charged 2 points on the front, 2 points on the back. Sometimes there's an exit fee too. It just depends. And then if anybody's ever dealt with hard money, sometimes if you're escrowing in your work, every time you've completed something and you want that money back, you have to call them out to come look at it. And they're like, okay, you've done it. Now I'll refund you back that piece, right? So our investor choice product, go back now. Seller wants $50,000. You're estimating $25K for renovation to get it renter ready. We're not putting all the bells and whistles into this property. We're just getting it ready for a tenant. Okay. And let's say The agent calls us and the agent says, this property is going to be worth $100,000 if you put 25K in renovations into it. Okay. We're going to rely pretty heavily on the agent on this one to pull comps for us to kind of let us know what's going on with it. So if you tell me it's going to be worth $100,000, we will lend you 75% of what that ARV is going to be. So that is $50,000 for your acquisition, $25,000 for your renovation. So I give you 75% of that. You come to closing with nothing out of your pocket. Okay. There is no payments on that for 3 months. Okay. So no payments, because normally with hard money lending, you have interest only payments that start within 30 days. Am I right? Everybody knows this because I know I've done it. So typically there's a payment that starts 30 days right after. There is no payments for 90 days. If it takes you longer than 3 months to get a rental property ready, we might need to have a conversation with some of the other contractors in this room. Okay? Because remember, it's a rental, not a flip. Now, from there, when you're getting close to what I do is I give you half the money at closing to start your subs. Most of them require their materials and some stuff up front. So I'll give you $12,500 because it was $25,000. I'll give you $12,500 at closing and we bought the property to get your sub started. And then when you're getting close to being done, you're going to say, hey, Jen, I'm getting close to being done. We're going to for you. So on the refinance, it's a regular conforming refinance. So the property has to meet conforming guides. So your 1 to 4 unit. No, I cannot do this in a DSCR. So earlier when I was talking about DSCR, that can go into their business name. This goes into your personal name, but I can tell you how to get out of that in a little bit. So we prepare your refinance at that time so that you're like, hey, Jen, I think I'm like 2.5 weeks from being out. And we'll go ahead and start your refinance, trigger it. The appraiser that completed the appraisal during the first transaction, which was the acquisition and renovation, is the same appraiser that completes your refinance transaction. So he is not going to question himself. Okay. Now, if you told him you were going to put in floors and you put in carpet, that's on you. That's not on him. That's your fault, not his fault. Okay. But then we go ahead and fund. You get the other half. We typically fund right when you're about done. And then you get the other half of your funds for the renovation to finish paying everybody out. So immediately, and a lot of the times people think that you're pretty tight on the numbers. Majority of the time when we do this product, people do not bring anything to closing. They don't really bring any money to closing because we're able to roll it in on the refinance. You acquired it with no money, rolled it in on the refinance.
Plus closing costs.
Yeah, and you rolled it in and we're at $0. So you paid $0 for a property that you acquired, renovated, put a tenant in with 25% equity and income producing day one. Like it's beautiful, right? Now all I care about is that you hold it for at least 6 months. Okay. Hold it for 6 payments with me. And then if you go sell and you need to capitalize so you can go tap in and go find another property, fine after that. But make 6 payments before you go sell it. That's all I really care about. I feel like there's a lot of questions.
What's that one? What's your experience in credit?
Credit, I only care that so I care about 2 things. I care about the ARV of the property. What's it going to be worth after you renovate? And I care that you qualify for a refinance. So yes, it is full doc. I need to look at everything. And you look at your credit and you look at for credit wise, there's not really a credit requirement per se. It's more so as do you qualify for a refinance on an investment property?
On the perm. So 620, 640.
So if you don't have experience, so we created this product to compete with hard money lending. Our realtors actually became our #1 borrowers for this program because they get the properties first. Then we also attack expired listings, which I'll go into in a minute. You don't really have to have experience. You can be a first-time investor, but if you are a first-time investor, I do require you to have a little bit of salt in the game. So I probably will ask that you have like 6 months reserve sitting on the side. Some people, when they want to jump into investing, they don't realize all the things that comes with it, right? So if you're a first-time investor, now all of a sudden you want to jump in, and now you're going to have subs, and you're going to have contractors, and you're going to have work, and you're going to have all these things, and it's your first time doing it. Some people, they think they can handle it, but it's a lot right at the very beginning until you learn the ropes. So no, first-time investors are not cut off. I just do require you to have a little bit of something.
Would you take a contractor's experience if you had a licensed contractor? Would that help?
So yes. And then also if you've had other flip transactions you've done, or if you're a realtor and have had investment properties that you sold, that's just a little bit of salt in the game. Your contractors, it is not like your renovation products on your like standard 203Ks or USDA renovation. It's not like those type of renovation products. With our contractors, I do require them to either be licensed or somewhere where I can make sure that they don't skip town on anything, right? I don't want like Joe Schmo off the street, even though they've been doing business forever. I just need to make sure that if we need to come after them, we can to protect you as the investor, right? Of that property. Keep going. You're doing great.
What's the rate? What's your rates on that?
On the first one? So on the first one, it's 11.95 is the interest rate on the interim. But remember, there's no payment until 3 months. Okay, on it. I
Just
charge you 2
interest.
points. I charge you 2 points on the first transaction, and then there's like a $4.95 admin fee. There is no exit fee because you're refinancing. Now, if you decided to sell it, so if you called me, you're like, Jen, I decided to sell this instead of rent it because I don't make money on that front end, right? So if you decided to sell it instead, then there'll be an exit fee at that time. Now your refinance will just be market. It'll be market depending on where you've been into the current market. What else we got? This is not good for a flip. So it's not good for a flip because it's intended for a buy and hold. But again, if you make your 6 payments and then you want to cash out on it and you want to go sell it
After the perm. So if you refinance on a perm in, say, May, first payment's July, you got July, August, September, October, November, December, you can sell it in January.
Yeah.
It's an EPO penalty on our part. We have to refund all of our commission we make, EPO penalties. So
well, and also
we don't like getting those emails.
no. But then also it's one of those things that's like you might get into it and then there might be another property that pops up and you're like, man, I think I want to capitalize on that one, you know? So it gives you that exit if you needed to. Well, we utilize this for agents on prospecting is we utilize it for expired listings. So we go right now, agents, what do they do on all the listings that you see? They virtually stage properties right now anyways, right? They virtually stage with furniture and whatever, bedroom furniture, whatever in the house. So we go and attack expired listings and say, oh, this agent wasn't able to sell this house for 50 grand, but that's because they put investor's dream or meets TLC. They didn't try to market it in a different way. So imagine being able to market a property as a realtor to a seller that's like, let me market your property this way. This property qualifies for no money down for an investor. And now you're giving that seller an option and a different marketing strategy on getting rid of that property and the investor getting a really good deal because seller's still getting full vote. They're still getting what they want. But as the investor, you're having the upside of it. Right.
Is there a minimum seasoning before the refund?
No, because it's a rate term. It's a rate term refinance, and I'm doing it literally within that 90 days. Now it's a 6-month note. Okay. Technically it's a 6-month note. But again, there's no payments for 90 days. And so majority of the times our investors have the property done before their first payment's due. And so it's a rate term refi at that point. Now, after your 6 months, if you need to free up your personal line, then we can do a rate term or a cash out to go into a DSCR. And then now you freed up your personal line. Because on your personal line, you can only hold 10 finance properties in your own personalness, right? And so what a lot of people do is after 6 months, they wait for it. And then they go and refi to a DSCR. And then they free up their personal line again. I feel like you had a question.
I know. I'm just intrigued.
Yeah.
What's your closing timeline?
Oh, on the first one, the acquisition?
Yes.
So I can close as soon as I can get the appraisal back and title working.
Scope of work to be done, cost for the renovation. We order the appraisal in your purchase agreement. The appraiser appraises the property with the improvement.
Yeah. Typically it's like 14 days.
What if we have an appraisal already that's only like 2 months old?
I mean, with the scope of work, if it's done with the scope of work.
Or is it as is?
It's at the repair value appraisal.
Possibly. I'll probably take a look and see if like one of our appraisers will take a look at it. That is also the perks of having your own panel. We can just kind of call them and kind of be like, hey.
You know who the appraiser is?
His name's Paul. It's on my phone.
Paul Vidal?
I think maybe.
He's on our panel.
Yeah, he's on our panel.
Yeah, Paul's my boy. That's where it helps out with it, because I know all my appraisers for years, and I could be like, call them up beforehand. Hey, what's the rent's going to be on this? What's the ARV? Just to.
Yeah, he just did it.
Yeah.
December.
So we can fund it fairly quickly. So it's typically like, I would say probably, I say 14 days to like worst case, but it's as soon as I can get an appraisal and title work back. And I've already pre-qualified you for the refinance. Now the scope of work, the bids is not like, if any of you guys have ever dealt with hard money lenders, I'm not dogging on hard money lenders. I love my hard money lenders. Okay. I do have really great relationships with them. But their bids sometimes stress me out. Oh man, you want me to itemize like every little thing out on this thing? I don't care about all that. Literally, our bids come in sometimes on one sheet, on like an invoice sheet, and it's handwritten, and it's like flooring, this, paint, this. Like, I don't need some crazy sheet. Just give me an estimate, because all I really care about, again, all I really care about is what is it going to be worth, and do you qualify for a refinance? I actually did a video 2 weeks ago. So I was going to this property myself, because I went to go put in an offer myself on this house. And I was like, hell, I'm out here. I'm going to go ahead and do a video while I'm out here. That video got 30,000 views. I woke up to like 100 DMs. I lost it by $506, by the way. I was really mad. My offer lost by 506. And my bids always end in a 6 too. So anyways, but I did that video, but it's just a great ability to continue to add properties without money and tying up your capital. Yeah.
2 questions. So the loophole you was talking about to get it out your personal name, that's the 6-month season and refinance it for the DSCR. And then when do you pay the 90 days worth of 11.6%? Is that wrapped into the new loan?
It's wrapped into the payoff. So once we go to pay it off, then we'll wrap it up. So sometimes the numbers are real tight. Like, let's say sometimes the numbers are really, really tight and we're barely meeting that 75% or 25% equity. Okay, so you might bring a few $1,000s to closing. That's way less than 15% down, right? You might bring $5,000 to closing. Okay, that's not 15% or 20% down or closing costs. So you might just be bringing a few grand to closing instead. Right. So ideally, I'd love for you to be able to get 0, because I'm going to squeeze everything I can out of my appraiser based on your bid of work. But if you do have to bring money, okay, you got to, if I told you you had to bring $5,000 to the table and you have a property with 25% equity and it's income producing day 1, are you going to be no? Or are you going to be like, no, this is terrible, right?
I got one for you. What about short-term rentals? Mess with that any?
So remember, all I care about is that you qualify for the refinance. So if it's a short-term rental, I really don't care if you qualify with that payment. So if you qualify with that rental without me having to give you rental income, then I really don't care what you're going to do with it, honestly. But if I need that income to qualify, then I'm probably going to be like, I need a 1-year lease, friend. Go grab me a 1-year lease and a security deposit, first month's rent. And then what you do with it after, if the tenant totally sucks and you gotta kick him out, it's not my problem.
But to get it rent ready, he has to buy frame chasing this.
We've never done that before.
Yeah, I've never done that before. You what?
To get a short-term rental rent ready, you need to furnish it. Is that allowed in the scope of work if the numbers still fit?
No, I'm not gonna listen to this. I'm not gonna, because that's not really gonna add value. Okay. That doesn't tangibly add value to the grid, right?
Yep.
Like, I had an investor call us last week. He's like, hey, I'm going to add HVAC. This property's going to be worth so-and-so. I'm adding HVAC. I had it. I'm like, that's cool. You got to have those. That doesn't really add value to the home. You kind of got to have both of those things. It doesn't really add value. And then I had another guy call me and he was like, man, I'm adding a pool. Actually, no. This guy. Okay. He called me. He's like in the historical area in Dallas. And he's like, I'm putting 700. I'm getting the property for $700,000. I need $350,000 worth of work. And it's going to be work 2 minutes. But it's in a historical area. So historical areas, as you guys know, which here in Louisiana, apparently it's really blasphemous to like tear a property down and rebuild it. In Texas, we don't do that. They're holding down, we just rebuild the whole place. Which I wish we had some like character in that aspect. But anyways, so it's going to take him like 4 months to get this permit. That's not going to work, buddy. It's going to take you 4 months to even see if you're going to be approved to get this permit to try to change this property from a duplex to a single. Oh. So that's when I look at your scope of work, I'm going to look at it and be like, oh, this doesn't make any sense. But we typically go through it together. What else we got?
Do you care if the rehab is more than the purchase price?
No.
It's all about the ARV.
I don't care. If you get a heck of a deal and you got a property, we had one in Amarillo. She bought the property for $15,000, put $40,000 into it, and it was worth like $150,000. Okay, that's a no-brainer all day.
Somebody else had speed wise, because we're wholesale on property and the faster. Like, what's the time frame like for that application process and all that?
So his team, Charles Preston and him, will get you pre-qualified on the refinance within 24 hours as long as you send in all your documents. And then, like I said, as soon as I can get an appraisal, I'll work it. And typically, it's less than 14 days.
Okay. But that's usually a 2 to 3 week ride for that sale. So y'all do wholesale properties? Have y'all done wholesale property this other?
I mean, I pay them off. No, most of these properties stuff from agent. Fully.
Shoot, wholesale just need to rank up for y'all.
Mm-hmm. Good partnership with wholesale.
Or they could, and I am in the market for one of these properties. So if there's any realtors in this area, I am in the market for one of these properties right now. I feel like there was another question somewhere else.
I got 2 questions.
Okay.
Are y'all licensed in Mississippi?
Yes, every FCC state.
Doesn't matter if it's rural. A rural area.
As long as we have comps.
Is it going to hit value? And do you qualify for a refinance?
Barn dominiums, log homes. Make sure we have comps.
Just work with bank statement loans. I mean,
So I can't do it. I cannot do this. It has to be regular conforming. So I can't do a non-QM. I can't do the permanent refi to be a DSCR or a bank signet. But after your 6 months of payments, if you want to change that to, DSCR and statement fully, that you do have qualified for rate. Do you want me?
And you say you're making your money on the 6 months of hold time. So the upfront fees can't be too expensive either, even for the refi, right?
Depends on what rate you want. If you want to buy the rate down later, whatever the market rates are.
But remember, you're putting a tenant in there, so it's all about the.
Yes.
It's all about the cash flow on the property too. I mean, you're not going to go into a property unless you know what the cash flow is going to be. You would have already done all that math prior to, right? I'm just simply giving you all the money for it.
So you're getting your points on the 2 points on the front end. That includes the refi too.
No.
So
So the 2 points is for me to give you all the money up front, and your renovation costs up front, but I don't charge you an exit. And then the refinance is your normal closing costs on our rate term refi.
But the 2 points is bracket.
When we go to refinance, yeah, it's not like you're paying it out of your pocket or anything. Again, most of the time, our borrowers typically come to closing if the property works and you're working with an agent or somebody who knows the numbers in the market well. They're typically coming to closing with either 0 to like $5,000 at most.
For a DSCR, would you have to seller finance your down payment?
I've never been asked that question. I don't know.
Either.
I've seen it work.
As low as they're getting or something like that.
Yeah,
They'd be in a second position.
they would just be a second position behind one.
Ask that question one more time.
Could a seller finance the person's down payment, your down payment for a DSCR? And then they would just be like in a second
Do
position.
you care where the money comes from?
What's that?
Second.
They'd be in a second position behind y'all's. No.
It's got to be sourceable asset.
I don't know. I've never been asked that question before, but I can totally find out.
Like if it's cash, like mattress money, like gangster cash, or
What if it comes from a mattress?
well, you can get mattress money. See, you got to put it in the bank. Wait, you do gifts on no, you can't do gifts on DSCR. You got to show at least 5% of your own funds on regular investment. Might have just put it in an account and let it season. If it's cash, you got to put it in a bank account. Let it season 60 days, and after that, you can use it.
I knew the Q&A session was going to take long.
Off of his question, since he wants it to go as a down payment, but would you allow the seller to hold a second?
I think I've already asked.
Well, his is going as a down payment. His second is a down payment.
Seller gift of equity.
But no, just to hold a seller second. That's how I started.
Yeah, say they want more. Say they want more.
When I first started, the closing agent, or the mortgage broker I use, he called it smoke and mirrors. If they was allowing you to take seller seconds back then, so we were just able to, the value of the property was there to increase. They held the second, and basically at closing, I got the seconds, and then just went down to the courthouse in 90 days about it.
Okay, so no seller seconds. It's got to be borrower's own funds, but we do allow gift funds.
On DSCR?
Yeah.
What percent?
Oh,
Who was that, Joey
just no.
or Timothy?
Yeah.
Yeah. Get Timothy. He's probably drinking right now.
I was like, why are you texting me right now?
Yeah.
I will get back to you on the other part, but no, sell that second. Is what he said. What else we got? I feel like there was another one. No. Okay, I feel like I did pretty good.
You did.
There's no questions.
Yeah.
I don't carry cards, but you can for sure get his.
Get this. This is my QR code for my. It's a mobile app I have. You can download it to your phone, create an account.
So first step is to go get pre-qual, right?
Yeah.
Just like you would on a purchase. So basically, instead of pre-qualifying you for a purchase, we pre-qualify you for a refinance.
Right.
Once I pre-qualify you for a refinance, then I'll tell you, okay, John, your cap is this. You can hold this. So when you go shop for a property, make sure you stay under this number. Pretty much.
Yeah. What's that?
Hold on.
got one for you in the morning.
He's had cured at 8:30 in the morning, eating 3 eggs and an avocado, so maybe like right after.
I got 4 eggs now.
Oh.
Extra protein.
So first step is get pre-qualified for your refinance. Once we get you pre-qualified, then you can go shopping. We'll look you up at agent
Right.
or whoever else for you to go find that property. Expired listings is really good.
Yeah, refinance condos.
You mentioned earlier.
Yeah, we do condos. Non-workable condos too.
Your turn.
I wasn't sure because we're in the direct line of sight. So my LLC is a partnership. Can you just start another LLC just for this? Like, because you mentioned earlier about not like it kind of muddies the waters if it's a partnership.
For DSCRs.
Yeah.
Because DSCR, the appetite for DSCRs, single entities are best for them unless your partner is also going to be signing with you.
Only.
Then it's different, right? If both of y'all are going to be on it, then it's different. Because you still, even though it's in the business name, you're still personally signing, right? So if both is signing, then it's not that big of a deal. But if y'all are going to be doing it like one at a time or whatever it is, then it's probably best to have a single entity.
Okay. Copy.
Partnerships aren't impossible. It's just, I am all about the easiest path and the most efficient path, and to make your life less stressful because you're already dealing with cash flow, you're already dealing with tenants, you're already dealing with all this other stuff. So the last thing I want to do is make your lending process hard at the same time. The last thing I want to talk about, I got one more thing. Is that okay?
Yeah.
Oh yeah.
We say y'all do Texas, right?
Yep.
Yeah, I live in Texas.
Okay.
Okay, that's pretty all right.
Yeah.
I came just for this right here.
Thank God.
But I love the Southern, so Southern Hotel is amazing. The last thing I want to talk about is the My Turn program. So we kind of talked about this a little bit. My Turn program, as you're building generational wealth and as you start getting tenants, some of these tenants are going to go want to buy a house themselves, right? And so remember, it's the long-term game. And so if they're coming in and they know that they're going to want to buy a house themselves, that tenant might not be there for a long time. So our My Turn program allows you, how we partner with agents on this, because a lot of real estate agents, especially like in the BR areas, they deal with a lot of leases and rentals, and they find tenants for their investors, right? So let's say you have doors currently and you work with an agent that makes sure they fill for you, right? So what we do is we work with the real estate agent, and as they're walking through, just like you would in an apartment, and they're like, oh, there's a hole, there's a crack, whatever it is. At that point in time, if they say that they're trying to buy a house in the next year, that'll let you know, one, that tenant's not going to be there for a long time, so you need to probably start looking for your next replacement. But then it also gets us involved quickly so that we can start educating them and seeing where they're at in the process, to get them pre-qualified to buy. So if you're an agent, it allows you to give the owner, for the investor, hey, I already know this tenant's not going to be here long, but because they're going to want to buy, but I'm already looking for your replacement here. So it gives you value that you're adding to that investor. For us, obviously, people want to achieve the dream of home ownership. So we start kind of getting involved at that process at the very beginning to educate them through, to figure out how far they are. But mine's, they're like 6 months out or 9 months out or 12 months out, or they could be ready right now. They just didn't even know it. So we get involved on the front end. That's a My Turn program. A lot of times we meet with property management companies with those, just so that we can continue to churn for them.
So it sounds like you're holding the prospect's hand to get them qualified for a loan, even if it takes 12 months.
That's right.
So you would be probably a good person for my lease purchase buyers to talk to when they first get into a lease. I'm looking to get them out of there in a year.
That's
to
right.
Buy that house.
That's right. So
Yep.
we walk them through. Our CRM does some of it. We do some of it. I am in the middle of finishing. This is like my perfection brain. ChatGPT can't figure it out for me and so I gotta do it myself. So it's gonna have basically a sheet, and they just plug in whatever number is important to them. This is what I want my monthly payments to be. So if they plug in monthly payment and then they plug in the Carish, it'll automatically calculate. This is how much money you'll need. This is the purchase price you're going to be looking at. This is et cetera, et cetera. And then they'll have like your information, our information, but we coach them through it. So we put them through basically like, okay, we need to do some credit work, but as of right now, I need you to maintain your job and not go change it. And
We got no score programs too, though. As long as they got a good mortgage history, 12-month mortgage history, clean. FHA, no score.
Yeah.
Conventional's got no
USDA
score.
does not require a credit score either.
Right.
FYI, a lot of people did not know that. But USDA doesn't require a credit score.
You get alternative trade lines.
10% of Louisiana is USDA approved. So
This whole parish is USA.
yeah. So we do handhold them through and walk them through it, through the process, because at the end of the day, we're helping them achieve the dream of home ownership, but we also want to protect and provide value to our real referral partners, our investors. The sooner you know that somebody's gonna be out, the sooner you put somebody else in. Killed it. Room silent.
2 questions for you.
Yes.
Do you finance mobile homes?
Single wides and double wides. Yes. Most lenders, apparently, nobody wants single wides. I have no idea why, but we are one of the only lenders in Louisiana that finance single wides. Side note, in Texas, single wides are like $250 grand. Okay. But yes, we finance single wides, double wides, all the things.
Permanently affixed to the foundation, tongue and wheels removed.
What about parks?
What do you mean?
Mobile home parks.
Depending on the leasehold. So like because it's obviously a leasehold. So as long as it's a 99-year leasehold, it's fine. If it's in a community. What's the second question?
Line of credit, some kind of.
I mean, you can do a HELOC on a condo, I guess. I don't know that answer. Never done a HELOC on a condo. I'll find out. What else we got? Yes.
Oh, so the 11% rate, that's for the renovation period of the Investor Ready program?
Investor choice.
Okay. And the what are sort of the average rates currently for the DSCR and the non-QM ones?
So it really depends, right? So that's always a loaded question. I love when we get onto the topic of interest rates. But to answer this question, so DSCR right now, that was 6.99. I had another DSCR earlier in the week that was 6.5. But then I also had one last week that was like 7.5.
Based on credit score and LTV.
Yeah, your credit.
Higher the credit, the better. Lower the LTV, the better.
What type of property it is. That kind of all goes into it.
Season and carry any DSCR loans.
There is not one. You could do under 6 months. You could do 0 to 6.
Take a rate on charter.
That's right. But on 0 to 6, I think DSCR 0 to 6, you gotta have 3 months reserves. Yep. If you're trying to do a cash out.
On the subject.
Yes. On the subject. Oh, not for all the properties that you have.
Right.
Yeah. Yep.
For that refi, is that DTI with the standard like 35 to 48% DTI?
50.
I love that you said 35 to 40.
If we get AU approval.
That's what I had to answer on my test when I had to take the licensure test. Technically, you can go to like 49.99.
Yeah.
As on your credit makeup and depend on the whole file, right? If you have like shoddy credit and variable income, then it might, and you have no money, then it might take it at 49. Yeah, but if you have all those things, it'll probably take it at 49. Yes, the DTI is normal qualifying. Yeah. That is another fun fact. Most people think you're capped at like 40-something% ratio or 35%. That's not true. Not true at all.
Clarifying question.
Yeah.
So the DSCR product, when you say the non-QM, is that the same as the DSCR or is that something different?
So I love that question, and I'm so sorry that I didn't clarify that.
We also have an assets depletion program.
So non-QM. Sorry.
Anyway, Shut up for a second.
My bad.
I got to talk a little bit. They need to see my value too, right? but I got a guy that's a friend of mine that was day trader, stocks and all that. He had $6 million in the bank. No tax returns, nothing, no kind of income trail, anything. So we got him qualified on an assets depletion loan. So what they do is they take that money in the bank and divide it over 60, is it 60 months? 60 months. And that's his income. Bought a primary residence, 25% down, $1 million house. The rate wasn't nice, but he didn't have to take any hits on his investments. So another non-QM with the bank statements. We got non-warrantable condos that we do. What other non-QM?
So non-QM is
Stated income, W-2 stated. No, I'm just kidding.
non-QM
back in the
is
day.
anything that is not conforming. Okay.
Right.
So anything that is outside of the normal box will be considered non-US. So your DSCR product is one product. Your bank statement one product. Those are all non-conforming loans. Those are all like specialty products, niche products, if you will.
So the DSCR is separate from the bank statement.
Those are two separate.
Yeah.
things.
It's based on the property.
Yeah.
Basically like what that property is going to produce rental wise and make sure it's, there's no issues with it. And other than that, they don't really care. Got to have your down payment and that's it. Good credit score. Decent credit score. Not great. DSCR doesn't care about your income or your debts. It's just based on the property cash flow. It's like a 1-to-1 ratio. So if your mortgage payment with taxes and insurance and everything's like $2,000 a month, and the rent's gonna be $2,000 a month, then that's fine. They approve it.
And what are like the basic qualifications for the bank statement product?
They take the 12-month average of your deposits and what do you have going out, basically for the businesses. Personal and business are a little bit different, right?
And then we go 50%. So majority of the time it's 50%. So I look at your deposits coming in and then your withdrawals coming out. But your deposits that's coming in, depending on what type of business it is, then we'll take either 50% of what that is as your monthly qualifying income. So like, for example, car dealerships, or if you run a car lot, there's a lot of money turning in and out constantly every single month. So in that business, there's not your inventory, you're holding quite a bit. So that's the 50%. Restaurants, 50%. But like if it's something that doesn't require a whole lot of inventory and not overhead, things like that, then you can squeeze out maybe 75% of what your deposits coming in are. And then yes, you can do HELOC on fodder in Louisiana, not in Texas, but yes, in Louisiana.
What happens if I have a home that has a lot of equity, that have a first mortgage on it? Can I get a HELOC on that? Because I want to keep the first mortgage because it's going to be paid off in 8 years, but I'd like to pull some of that equity.
Yeah, you can always do a HELOC. Mm-hmm. Fun fact, we also do HELOCs in Texas and personal income Texas. And then we also have a couple of HU, so you can get money before you have to buy, but that's not today's up.
Yeah.
We have all the things. Did that answer your question on non-QM?
Yes, thank you.
No problem.
Last one.
Okay.
Are the bank statement loan products is roughly the same interest rate range as the DSCR?
Yeah. Non-conforming is non-QM typically the same. Now, I will say that bank statement rates are a little bit better than DSCR rates. I mean, I've seen bank statement rates go down to like 6 and an 8.
Yeah. He's my rate shopper right there. Hey, can you go to this internet lender? Can you get this rate? I'm just kidding.
Yeah, talk to somebody who's local that's
Yeah.
trusted. We've been doing it 70 years, obviously. Fun fact, 1956, Price is Right started that year. Fun fact if you didn't know.
70 years this year, 70.
Yeah.
Yeah.
But yeah, talk to somebody local, right? Like, if especially when you're into these niche products, knowing everything about them is important instead of like some of your big, I'll never talk that about another lender, but just big companies, sometimes they just don't, one, they don't know the market, two, they might not know a non-QM product club. And we do, I mean, his business alone is probably 30% non-QM,
Mm-hmm.
which is quite a bit.
Like
Anybody else?